Hello there, Adam Gower here, and welcome to the GowerCrowd Podcast, the real estate crowdfunding show Deal Time, where you can learn about active crowdfunded real estate deals directly from the sponsors themselves. Subscribe to my free weekly newsletter at GowerCrowd.com, where you'll get links to the podcast, as well as news and updates exclusively from the world of real estate crowdfunding. Sign up at GowerCrowd.com so you don't miss out. Also, if you want to pitch your deal on the show, just go to the podcast page at GowerCrowd.com and look for links on how to submit your deal. Please note that while I don't endorse the deal, sell securities, or make investment recommendations of any kind, some sponsors are GowerCrowd clients. Now listen in and learn about the next great deal on the GowerCrowd Deal Time podcast. Here we go. 810 Wright Street. What's the deal?
It's two Class A plus office buildings in Westport, Connecticut, 84,000 square feet, 90% occupied, with two monster credit tenants, UBS and Ameriprise. That's it in a few sentences.
Perfect. What's the story? Tell me the story of the deal and why you like it.
Oh my goodness. So I'm going to do my very best. I'm going to tell you just the short version, okay? The short version is office is in a very unique place right now given the coronavirus pandemic. So there are certain types of office that are probably going to really thrive, and this happens to be one of those. And so the short story includes, how has this asset performed through the pandemic? Through the past year, in March of 2020, the sponsor ceased making distributions to investors, which is a fairly aggressive thing to do, but they had the opportunity to shore up their cash position. And then subsequent to that, in the next quarter, they were able to offer discounts or at least rent abatements to some of the existing tenants. So they gave 5% of the total revenue they gave rent abatements to, which have now since all expired. The tenants are now all current. And you've got an office asset in a super high net worth location in Westport, Connecticut, that is commutable from downtown Manhattan. And so we believe that this is one of the assets that's actually going to really thrive post-pandemic. And we'll get into the reasons why. Do you want to go into?
Is it an acquisition?
They acquired this a year ago, and so this is an existing relationship. They allocated a unit of equity to Eastview Capital that I am raising for them, and so it didn't feel fair to me to raise during the pandemic, especially when they weren't making distributions. And so now they're back to making distributions, and the property looks better than ever.
So what's in it for investors? Give me, from an investor perspective, what's in it?
Sure. So you have the majority of the revenue coming from two credit tenants. One is UBS, one is Ameriprise. You also have a value add component to this. And the value add component really relates to the history of the asset. And so I want to give you a quick history and a few physical strengths of this particular deal. They bought this property a year ago. In 2014, the last major tenant to sign a lease at this property was Regus, which is a co-working tenant, which is also a very interesting thing that we can talk about, but it does have relevance to this particular property. They signed at about $32 a square foot in March of 2014. Marcus Partners created a new fund, bought this property in October of 19, about 5 months after Regus signed their lease. They spent $5 million and took this thing from a Class C to a Class A. And it turned out amazing. And so in less than a year, they had UBS sign a new lease for 11 years at $47 a square foot. So boom, big pop. A month after that, Ameriprise signs another lease, $47 a square foot. Boom. So with those two tenants, their business plan, their fundamental business plan in less than a year had effectively been verified. Now, they still had some time for all the old leases to burn off, specifically Regus. And so there's one other major tenant in the building. It's called Berkowitz. They're a law firm. They provide corporate litigation services as well as venture capital and entrepreneurial type of legal services, which is relevant to the surrounding community. So the upside, the value add component to this is Regus lease expires in 2 years. And so their $31 a square foot might go to $47. The pro forma conservatively estimates about $40 a square foot Same with Berkowitz. They're about $33 a square foot, bump them to 40. And so now you have a significant jump in NOI between 2023 and 2025 in its legacy value add that Marcus Partners created that they didn't have a chance to realize. The obvious question is, why did Marcus Partners sell? And the reason is, in 2014, 8 and 10 Wright was the first acquisition for their new fund. In 2019, they had allocated all their money for that fund and they needed to raise something new and they needed to show some gains. Since this was the first one, this was the first one in, this was the first one out. And so they sold. And the sponsors here, Waterway Capital, were able to pick up that legacy value add component without having the new, like the development risk, the lease up risk, and all that. All that was off the table. So it was that's sort of the secret sauce to this one, is that legacy value add that the original redeveloper or the original opportunistic investor created. So that's the short version. I want to tell you briefly about some of the physical strengths of this particular asset. This thing is on a hill, and so it's in Westport, Connecticut. It's a very cool little town. It is commutable to Manhattan. You can take the train. There's multiple highways. But because it's on the hill and it has this water view, it has a water view that no other building has. And so a lot of the competitors, especially the Class A competitors, market the fact that they are right on the water, right on the river, which is nice. That river also has a history of not doing so well during negative weather events, let's call it. And so the very bottom of this building on the hill of 8 and 10 Wright is 16 feet above sea level. So you've got an inherent protection here that, although doesn't necessarily come up in typical conversation, and it's something that you don't often think about, long term, it's a significant value add. So the other interesting component about this is that because it's on a hill, it has underground parking, and no other building in Westport has underground parking. And so UBS, it's wealth advisory, Ameriprise wealth advisory. You've got some lawyers, you've got some investment funds in here. The type of tenant, the type of client that these tenants are trying to attract, the underground parking is a real important sort of competitive advantage. Having a Class A office space that's a little bit nicer than everything else in the submarket is a really important competitive advantage. When you're doing wealth advisory, although a lot of it, I think that everyone will acknowledge that the wealth advisory business is going through some changes, including access to private placement offerings like this, that Eastview Capital is doing. The face-to-face interaction still remains an important part of their business. And so this building
number 23 out of 100 wealthiest towns in America, isn't it?
That's correct.
Which is important. Plus, don't forget the zoning. No one can build, right?
That's right. And so Westport specifically said you can no longer build anything more than 10,000 square feet. And so at 84,000 square feet, this is the only institutional caliber asset in the market.
Game in town.
Very, very sort of like moatish type of things. And by moat, I mean MOAT, like there's just a protective component to this. And I think that you can make that argument and blow some holes in it. But the reality is that given the performance through the pandemic, this thing is now current. It's now generating 6 to 7% current yields. Like it is just past performance is no guarantee of future performance. But boy, this thing really did well through the pandemic.
All right, perfect. And so that leads me to the final questions. What's in it for investors? What's the minimum investment?
Minimum investment's $5,000. There's quarterly distributions. It's the senior debt matures at the end of 2026. So it's a 5-year investment horizon, maybe a little bit longer. And it's a 14 IRR. And that 14 IRR assumes that there's tenant improvement. Assumes UBS does not renew. There's $1 million in tenant improvements. So that 14 IRR is a base case, very conservative assumption. And also these rollovers, these tenants are probably going to go higher than $47 a square foot. The last thing I'll mention is that what's happening in the office market here in Manhattan is it's not necessarily super exciting for investors because the prices don't reflect the change in income. What is interesting is that there is no doubt that sort of the ascendant office use is something that's close to home and caters to the executives. And this asset does exactly that. So beautiful. That's 8 and 10 Wright Street.
810 Wright. Outstanding. Thank you, Dan Drew, Eastview Capital.
Thank you, Dr. Gower.
If you want more information on this deal and on all the others in this new series, plus if you want access to the latest news from the real estate crowdfunding industry, and if you want to be the first to know about some amazing proprietary industry data that we're putting together for you, subscribe now to the GowerCrowd newsletter at GowerCrowd.com. It's totally free and it is the most comprehensive source of news and information about real estate crowdfunding anywhere on the planet, all there at GowerCrowd.com. Thank you for joining me and for listening in to today's deal. This is Adam Gower wishing you well and signing off.